All right, appreciate it, Dan. Thanks, folks. Welcome aboard. As Dan said, my name is Matthew Buckley. My call sign is Whiz, and obviously that's my parents actually did like me. That isn't my God-given name, but as Dan alluded to, I earned that call sign because I flew FA-18 Hornets for the United States Navy for over 15 years. I graduated from the Navy Fighter Weapons School, which many of you know as Top Gun, and I also flew 44 combat sorties over southern Iraq. Towards the end of my career, about the last 5 years of my naval aviation career, I was an adversary pilot. So I was the bad guy, right? Viper. I flew around in aircraft painted like enemy MiGs. We flew bad guy tactics, just had an absolute blast. What's that have to do with trading, and what's that have to do with anything, essentially? Well, folks, I went from the cockpit to the trading pit, okay? When I was a young lieutenant, back in the early 90s, there was no Top Gun options. There was no Winvesting. There was, I literally had to, it's just before even this thing called the internet really started to become in vogue. And I had to literally go to the library and check out a book on options trading. So as a young 20-something, I taught myself how to trade equity options. And I rose from being that self-taught retail options trader all the way up to be the managing director of strategy for one of the largest volatility arbitrage options trading firms in the country, headquartered right there in the Chicago Board of Trade. Additionally, I was the founder and CEO of the Options News Network. As Dan said, we shot on the floor of the CBO and the CBOT, had an absolute great time, essentially the CNBC for options, because as you know, I call CNBC Comedy Central. As you know, Comedy Central really kind of pays lip service to options, so we decided to do it on our own. We had an absolute blast. Years at the Options News Network. Decided Chicago winners were best left to other people and not me, and decided to move down to South Florida about 5 years ago, where I started Top Gun Options. I'm also the Chief Development Officer of a hedge fund, which is a private placement, so really can't talk too much about that, but for high net worth individuals, and also the proud father of 3 beautiful children here in South Florida. So that's a little bit about my background. More importantly, and this really goes to what we're going to talk about today, I'm also a strategic consultant to Fortune 500 companies, large, small companies, literally around the world. I was in Paris and London last week. I'm hopping on an airplane out of Miami International tomorrow morning to fly out to Portland to give a keynote Friday. Literally around the globe, from China to Brazil, Argentina, all across the United States, Canada, and I work with companies and I apply the same methodologies that actually you're going to learn about that I apply to my trading. Discipline, risk management, superior execution, accountability, having a strategy, having a contingency plan, knowing when to get out of something bad or to stay into something good. This is just a representation of some of the companies that I've worked with over the years. Now, as a fiduciary in these companies, I don't trade in them. I don't talk about what's going on in these companies. Top secret clearance with the United States government. I think I'm pretty good. So I'm not going to talk about exactly how do I sleep. But what does this do? What's this have to do with trading at all, Wiz? Absolutely everything. Folks, if you're getting your financial news or what's going on in the world from Comedy Central, it's late. It's old. Okay? By the time it gets to you, it's already gone through professional traders, hedge funds, institutions. It's got to be written on a teleprompter by some intern for some coiffed person to read. It's old and it's stale. Top Gun options traders know this stuff before Wall Street knows. Okay? I know who's hiring, who's firing, who's acquiring, who's launching new products, new services. I know everything about the economy before it hits the ticker tape. That is extremely powerful. Extremely powerful, and as I'll show you shortly, it reflects in the performance of our model portfolios. Okay. Additionally, if you care, I've taken this methodology, worked with other high-performing teams, worked with Cam and Coach Rivera at the Panthers last year, the season before with Coach Fish up in St. Louis as well, working with other high-performing teams and really trying to get them to execute better. But as everybody on this webinar should know, the best and only team in the NFL is the Philadelphia Eagles. and I'll leave it at that. Okay, so folks, I literally went from the cockpit to the trading pit, okay? And there's something you need to know, and I hate doing this first, but to kind of keep everybody's attention, all right, Whiz, that's a pretty interesting background, you know, save it for a cocktail party. Well, maybe this will get your attention. Here is 3 of our weekly options trades from last week. I placed 3 weekly options trades, one last Monday. I think I got filled on the Twitter trade, no, the SPX trade Wednesday, whatever. These are 3 weekly options trades from last week. More importantly, take a look at maximum loss. Okay, look at Mr. Frowny Face up here. Max potential loss, $5,200. Let's just round down and say $5,000. Max potential profit. This was an Apple Iron Condor, $2,300. This trade closed for maximum profit of $2,300 on Friday. Maximum loss, $5,000. How did I come up with $5,000? Well, first of all, it's based on 75 contracts, but at Top Gun Options, as you're going to learn, I have what we call trading SOPs, standard operating procedures. And at Top Gun Options, I don't want to risk more than 5% of my model portfolio on any one trade. Why? Well, the model portfolios that I manage at Top Gun Options are based on a $100,000 account. Okay, 5%, math in public, $5,000. That's me, folks. That's me as a professional trader, 5% model portfolio, $5,000. You have to come up with your own SOP, your own standard operating procedures. Whiz, I don't want to risk more than $2,500. I don't want to risk more than $200,000. Whatever it is, fine. You pilot your own aircraft. For me, 5% is my model portfolio. Second trade, weekly options trade that we put on last week was on Twitter. This trade actually risked $2,500. Okay, this was a 1-to-1 risk to reward ratio. And as you can see right in the middle there where it says open P&L, this trade closed for maximum profit of $2,500 as well. This was a bull put spread last week on Twitter. And then finally, we put on an SPX bull put spread that closed for nearly $2,900, $2,850. This trade risked $5,000. So you ready? 5 and 5 is 10. Plus 12.5, that's $12,500 in risk. If I hit my head last week and didn't wake up until Saturday morning and every one of these trades went to hell in a handbasket last week, the most that I could have lost was $12,500. No more, no less. How did we do? $7,600 in profit in 1 week. 3 trades, $7,600. On limited risk, $12,500. Folks, if again, math in public, I'm a poli-sci major and a Navy fighter pilot, so I had to pull out a calculator. That's a 61% return on risk. Okay? Now, that is in our weekly options model portfolio. Very, very tactical, right? Quick strike trades, in and out, maybe trading a day, intraday, maybe Monday through Friday. That's our weekly options. The other portfolio I'm going to share with you today is the primary live trade brief model portfolio, longer term trades. I'm trading the front month, February, March, April, and also the back months. I have trades all the way out to January of 2017 that support my strategic mindset on individual positions. China, Russia, gold, Brazil, long-term positions, the XLE, XLF, XLK. I'll show you my portfolio in a couple minutes. You're actually going to get to eavesdrop into how we're doing here at Top Gun Options in a couple of our model portfolios. So let's go ahead and get airborne. And again, well, one of the things I'm going to talk about, folks, is right there on the screen, BEAR-O. Okay, kind of a neat analogy or nomer acronym, whatever it would be, to use, acronym. BEAR-O. Today we're going to talk about Brazil, if we have time, and then we're going to talk about Europe, Asia, Russia, and oil. Okay, so that's what BEAR-O stands for, B-E-A-R-O, and you can write that down. Before you write that down, though, here's what I want you to do. I want you to write down, draw a triangle for me on your trading notes, and hopefully you have some trading notes or something to take notes with. I want you to draw a triangle, and at the top of the triangle, I want you to put an S. Break it up into thirds. An S at the top, an O in the middle, and a T at the bottom. Strategic, operational, tactical. Many of you are very, very tactical traders. Many retail traders just do that. They're very, very tactical. Whiz, I don't even know what the hell I'm doing for lunch, let alone in Apple this week. Exactly. That's like me throwing a rifle at a Marine and saying, hey, march in this direction. Well, why, sir? Just do it. Is there any morale out of that Marine? Any buy-in to the mission? Of course there isn't. Strategic, win the war in Iraq. Operational, take this city. Tactical, guard this bridge so an armor brigade can cross and take the city, go to the capital, win the war in Iraq. Tactical, operational, strategic. Strategic, operational, tactical. We cannot just jump into trading without knowing what is going on strategically and doing intelligence gathering, and that's what we're going to do today. I'm going to give you a quick strategic overview of what's going on in the world, geopolitically, macroeconomically. What do we care about geopolitics, folks? Well, guess what? 6 to 8 months ago, when Putin took over Crimea, what happened in the markets? Okay? What happened when that Malaysian airliner got shot down by the Soviet Union? And I chose all of those words of what I just said specifically because it is the Soviet Union again, and they shot the airliner down, I know for a fact. But, of course, our government's not going to say that because we don't want to poke the bear. I digress. So after our intelligence brief strategically, then we're going to get operational. We'll talk about what's going on here in the United States, what's going on with the Fed, with the futures, with earnings, with macroeconomic events such as this week. I think it's tomorrow. We're going to get retail sales, core retail sales, and Friday's University of Michigan consumer sentiment preliminary numbers. Okay, that's operational, United States. Then and only then do we get tactical. So, ladies and gentlemen, if you jump up in the morning, turn on Comedy Central and say, hey, Tesla's in the news, I'm going to trade Tesla, you're a tactical trader and you're going to get wiped out. Because if you're doing that, you're going to wake up one day and go, why the hell are the futures down 600 points? Oh, okay, geez, Putin just took over eastern Ukraine and is marching on Kiev. Okay, that makes sense that the Dow is at 6,000. Okay, you have got to know what's going on in the world and have what we call SA, situational awareness. Excuse me. So what we want to do right now is let's talk through kind of those Barrow acronyms. I want to start with Asia first, though. All right, Asia. Ladies and gentlemen, I predicted to Top Gun Options traders about 2.5 years ago that China would overtake the United States as the world's economic superpower by 2016. I think I'm going to be a little off. I think they've already done it, and they're going to do it even more. Okay, but don't get me wrong. China is not without its warts, to be perfectly honest with you. They got some Detroits out there. They have a lot of regional debt issues. Okay, they have a housing market malaise at the retail level. They have credit issues. They got a lot of problems. Okay, excuse me. However, the PBOC, the People's Bank of China, has shown an inclination to jump into the party, just like other central banks, whether it's the Bank of Japan with Governor Kuroda, Mario Draghi and the ECB, even Governor Carney over there in the Bank of England. The PBOC has shown a proclivity at the barrel of a gun almost in China to get involved in capitalism. We remember in November, unexpected cut in the interest rates. Wow, right? Remember that? And then last week, China's central bank reduced the amount of cash that banks have to hold as reserves. China's shown, and their central bank has shown, an enormous interest in getting involved in the markets as needed. Remember, about a year ago, maybe a little bit more, they had a housing bubble. Now, that thing's popped, but they had a housing bubble. They kind of pre-popped it. You know what they did? They learned from the United States. They're like, we don't want a 2008 here, man. We're going to look at the lessons learned from the United States, and we're going to pre-pop this thing. They woke up one day and said, you want to buy a house, 80% down payment, and a 20% interest rate. Any takers? Cricket. Okay, no. Housing pop, done with. So I like China. I'm going to show you one of our long-term bullish positions on China. I would be getting long-term bullish on China again today. All right, so that's what's going on over in Asia. Bank of Japan Governor Kuroda is doing his own Mario Draghi and Bernanke, Yellen in Japan. So not too much to cover in Japan. They're kind of Prime Minister Abe and his Abenomics and his arrows, 3 arrows in his quiver, all those happy words. They're trying to get out of 2 decades of wandering around their desert. I have a trade on Japan I can show you. It's a binary trade. Kuroda and Abe are either going to succeed or they're going to die trying. And sometimes in Japan that might be literal. So we'll talk about maybe some trades on Japan. All right, we got to get over to Russia and Europe, folks. This is getting uglier. Okay, Putin arrived in Minsk today to do a summit with some of the folks in the neighborhood, and his deputy foreign minister essentially said, because the president, if you watched the president's press conference yesterday with Angela Merkel about arming Ukraine, first of all, Merkel and Hollande, the French prime minister flew over to Russia and tried to talk to the bully. What did the bully say? Yet, Merkel came out of the meeting and said, it really is schoolyard tactics, folks. They went and tried to placate the bully, and the bully essentially punched him in the face, and everybody turned around and said, okay, well, this guy's really, really, really mean, and, we can't do anything to him. Ronald Reagan's got to be spinning in his grave, folks. So Merkel, Hollande said, arming Ukraine with defensive weapons, God forbid you let somebody help themselves defensively, again I digress, will result in war. Well, Mr. President, there already is war in eastern Ukraine. There's 6,000 people dead so far. I don't know what your definition of war is, but dropped your rifles a couple times in the past anyway, so I wouldn't listen to you. Merkel said the same thing. Putin's not going to be intimidated if we arm Ukraine. So great. Let's just give them eastern Ukraine, and let's just give them the whole Ukraine. Who cares? This is getting uglier, folks. We have got to keep an eye on this. Like I said a couple months ago, this was huge news. The financial media only care when they care, ladies and gentlemen, and that might sound like a master of the obvious, but let me brief you as to what exactly that means. Just because CNBC, Fox News, whoever you're watching isn't talking about Iran getting a nuke doesn't mean that the guys underground, the guys on the ground aren't looking at TV going, you know what, they stopped talking about us. Everybody go home. I'll call you back whenever we get on the news again. Have a good day. That's not happening, folks. So there are things going on around the world that you have to be in the know about and have situational awareness about, because when you wake up and the futures are down 1,000 points because Israel has finally attacked Iran and your portfolio is at zero and mine isn't, it's your own fault. Okay, great read in the journal this weekend from NATO's commander in Europe, and I'm surprised he's got a job today, and the president hasn't removed him because this dude was pretty blunt. There is no provoking Putin, folks. There's no such thing. He's already provoked. He's doing whatever he's going to do. It doesn't matter if we give Ukraine defensive weapons. We're not going to provoke him more. How do you provoke somebody more who's moving into, this guy already said, based on the equipment that they're seeing move into eastern Ukraine, this is permanent. This ain't a little incursion. So how can you provoke him more? Okay, so read this if you get a chance in the journal. Ukraine is in a tough spot, folks, and the markets are going to react to it eventually. Greece, unless you've been living on the side of the moon for the past couple weeks, this is going to get uglier too. As I am speaking to you, they are speaking overseas about what to do with Greece. This is the finance minister, but he's just as crazy as the president, man. Good on him for saying, you know what, we're going to live up to every promise that we made in the election, but guess what some of these promises were? Not only are we not going to pay you back, Germany, you owe us money. You owe us money, war reparations, pay up. We're going to raise the minimum wage instantaneously. We're going to lower the retirement age. I know the grown-ups in front of us that ran this country that tried to get us back on track. We're raising the retirement age. We're going to put it back down. This guy is doing the Obama Happy Meal, right? Order whatever you want, and the guy behind you is going to pay for it. Greece ran out of guys behind them, okay? And Angela Merkel and the Germans and a lot of other folks in Europe aren't laughing too hard at this, okay? This guy said yesterday, quote, the Eurozone is a house of cards. Greece is the bottom card. You pull us out, it collapses. They are egging on the Germans and the rest of the Eurozone to blink. This is brinksmanship at its worst, folks, and they're running out of cash. You know why Greece is running out of cash? Because they promised to do all these things during the election, and nobody's paying their taxes now. Their revenues have dried up almost instantaneously, like $1.5 billion in the hole in the blink of an eye when these guys got elected. Because why would you be the sucker to pay your taxes when you're banking on them to change the tax laws? And if you don't know anything about the Greek culture, it's almost a cocktail party matter of pride to sit there and say, yeah, I haven't paid my taxes in 20 years. They don't pay their taxes, let alone when the new government says we're going to change it so everybody gets an Obama phone. Bad stuff in Greece, folks. I think the odds of Greece leaving the Eurozone are probably slim to none, and Slim just left town. But it doesn't mean that the VIX, volatility, we're not going to see some ugliness before there's a resolution. Okay, so know that this is ugly, and it could get uglier. Okay, all right. The O in Barrow, oil. This is not good. Come on, Whiz. I watch Comedy Central, and the cheerleaders told me that $20 oil is great, and that's why they're on Comedy Central and not managing portfolios and doing something with their lives. They are wrong. $20 oil is horrible. Schlumberger last week or 2 weeks ago announced 9,000 layoffs. NOV the other week, about 5,000 layoffs. BP, ExxonMobil, Chevron, all these guys that came out with earnings to a company, massive big oil company, said what? We are slashing, we're either freezing or slashing our 2015 CapEx. What's CapEx? Capital expenditures. These guys ain't spending anymore, folks. Not only are they not spending, they're firing people. So I don't care that some cheerleader on CNBC says, well, if mom and pop were spending $100 to fill up their tank, now they're only spending 75. That $25 goes back into the economy. They're wrong. I don't do that. Matter of fact, I go, wow, I'm going to take that $25 and pay off some of my credit card debt. I don't go out and buy $25 worth of stuff. And I guarantee you, the $9,000 or the 9,000 jobs lost in Midland, Texas, you ain't going to offset by your $25 spending spree at Denny's. It's just not going to happen. Also, not only are the oil communities in West Texas, North Dakota, Louisiana, even East Texas along the Gulf there starting to get impacted, mid-sized oil services companies. When these things start going bankrupt, folks, and also, here's a little known fact. All these oil companies are hedged. Okay, just like airlines hedge against oil prices, oil companies hedge against oil prices fluctuations. And guess who their counterparties are? Other oil companies. Now, if this sounds like 2008 all over again, you're right. Lehman Brothers, Bear Stearns, the Thundering Herd, all these guys were counterparties to each other. And when somebody goes, you know what, I smell a little smoke at Lehman Brothers, I don't know if they're good. You know what, I'm going to go get my money first. Hey, Lehman Brothers, I want out of this trade. Bear Stearns, well, I'm hearing you want your money from Lehman. You know what, it implodes rapidly. So be very, very careful with oil. Oil going to $20, like I said, you putting an extra $25 in your pocket every week is not going to stave off massive bankruptcies and a contagion in the oil sector. So we'll talk about that here in a little bit as well. We're almost done with our strategic brief here, folks. Actually, we are covered everything strategically. Now let's get to let's get a little operational talk about here in the United States. And if hopefully you've noticed by now, I'm probably a lot different from a lot of financial trainers out there, right? Notice I said training and not education. I'm not an educator. I don't work at Princeton, and you probably can tell my political leanings. And training gives you a skill. Fighter pilots are trained. Doctors are trained. Plumbers are trained. A lot of educated derelicts running around out there. So at the operational level, you saw the jobs report last week, folks. It wasn't good. Let's be blunt. Come on, Whiz. Unemployment rate ticked up a little bit. Who cares? But we're creating 200,000 jobs a month on average. That's good stuff, isn't it? No, it's not. The CEO of Gallup gave a great interview the other day, and I'm surprised he didn't have somebody else go start his car. And he actually joked about that. He's like, I'm probably going to end up in a ditch somewhere. He called the jobs report a big lie. If you're an adult and you mow somebody's lawn for an hour a week and you make $20, you're employed. Okay? If you just got your hours cut to 30 because of Obamacare, you're employed. Right? There is so much funk in the employment numbers that it's not even funny. You guys are on Main Street. You know reality. You live in it. You don't live inside the Beltway in very, very expensive houses. And you're on Main Street, and you know the jobs market isn't good out there. Okay? Regardless, having said that, the Fed, at the end of the day, is going to, in my opinion, start raising interest rates. I mean, they really have to. I mean, this thing's just, this is getting a little nuts. So, I want you to write this one down. Underneath the triangle with the SOT, write this saying down. When interest rates are high, stocks will die. When interest rates are low, stocks will grow. Make sense? We've been in this near zero rate interest environment for, I can't remember, God, I don't remember, years, obviously. So we're obviously in a very deflationary environment right now. Whiz, what are you talking about? It's the Fed's target interest rate is 2%. We're barely a blip on the heart rate monitor of inflation. So the Fed has really got to start raising interest rates. But when you think about it, when interest rates are high, stocks will die. Right now, money is cheap, folks. Stocks are using this. Companies are using these unprecedentedly low interest rates to do what? Buy back their shares. That's another reason that the market and the S&P 500 are so high right now. Share buybacks. The number one buyer of the S&P in 2014 was the S&P 500. I'd do the same thing if I was the CEO of Whiz Incorporated and money was this cheap. Steve Wynn, great guy, runs obviously the Wynn casinos and his empire. Great American. He's like, I'd be an idiot if I can borrow billions upon billions of dollars for a couple $100 million in interest. Why wouldn't I do it? I'd lever up like crazy. But eventually, that's going to stop. And when interest rates start going up, companies, their earnings are really, really going to start to be under pressure. Okay, so that is one of the things that we have to keep an eye on is the Fed raising interest rates. If you recall, last year, every Fed meeting was guess the taper, wasn't it? The VIX would be around 12 or 13. Here comes a Fed meeting. He might taper during this one. VIX up to 20, 23. We're going to keep interest rates low, blah, blah, quack. Oh, VIX back down to 12. Vol implode, vol explode, vol implode. It was great. It was like shooting fish in a barrel. We traded the VIX like crazy, not only around government shutdowns and debt ceiling debates, but the Fed meetings. It's going to start doing that again, okay? Now we are playing guess the interest rate rise. I think it'll be June. Some people are saying, Whiz, it'll be next June. Some people, they're going to be good about it, or at least they're going to try and be good about telegraphing their intentions of when they're going to raise interest rates and all that type of stuff. I hope they're good. I doubt they're going to have a Fed meeting and just all of a sudden go, yeah, we're raising interest rates now immediately, and because the market will go full freak mode and it'll get ugly. Okay. All right. We're ending earnings season right now. And it's that porridge earnings season. It wasn't too hot, wasn't too cold. It was just, it was about just right. Let me close my trading platform here because all these flash ads on these websites are a pain in the rear end. So 1 second here. One of the things that I wanted to show you was the Baltic Dry Index. There you go. Stop that plug-in. The Baltic Dry Index, folks, is an index that follows shipping, right? Transports. It is at historic lows. The Baltic Dry Index is down at 1986 levels. The last time the Baltic Dry Index was down here, I was driving around in Iraq as a junior in high school listening to Bon Jovi. What does that have to do with anything? Folks, transports and financials tend to lead us into and out of train wrecks. Okay? So, if people aren't shipping, I'm down here in South Florida, the Port of Miami, it's a huge port, Fort Lauderdale. If people aren't shipping, if you're not sending that last-minute gift overnight via FedEx, you're not buying something massive that has to be shipped from overseas, that is a slowdown in the world economy. Okay, here it is right here. Took me long enough. The Baltic Dry Index. If you've never heard about it, this is a canary in the coal mine. When this guy is down, look at this. Look at what it did around the financial tsunami. Look at that. Holy cliff, Batman. But look, January of 2015, June, or halfway through 1986. Financials didn't have a great earnings season either, folks. Matter of fact, Wells Fargo, now your Goldman Sachs, your Morgan Stanleys, JP Morgans, yeah, all those type of blue bloods on Wall Street, they didn't do so good, but who cares? First of all, they'll go cry at their house in the Hamptons, but their FIC divisions were the ones that didn't make that much money. Fixed income, commodities, and currencies, right? Those were the things that really lost a lot of money for those blue blood banks. Now, the one that kind of worried me as far as financial earnings was Wells Fargo, right? Wells Fargo is more mom and pop-ish. It's home loans, small business, home equity lines of credit, auto loans. Wells Fargo is another canary in the financial coal mine, and they didn't do so hot. Okay, they came in line, which in today's Wall Street environment, if you come in line, you lost. So that's bad. A Wells Fargo miss is a canary in the coal mine. Okay, so all right. Having said all of that, now it is time to get tactical, and hopefully now you can see why this is the way I trade. I just don't hop in a Hornet, get airborne off the USS Abraham Lincoln, and fly over Iraq and go, okay, what are we doing today? That's how people get killed, folks. And in case you didn't notice, I don't want to get killed. Now, my wife would say I love myself too much to go out and get killed, and she's probably right. But I want to live to fight another day. And this is a good-looking, just ask me, this is a good-looking portfolio. On a day when the market's essentially flat, now the market's recovered off its lows because of a potential, quote, peace deal out of Minsk. If you think Putin has any intentions other than securing most of eastern Ukraine and then turning Kiev into a satellite state, you're wrong. I think probably this year he moves into Moldova and Latvia. You heard it here first, okay? And what the Europeans going to do? Not a damn thing. So stand by. But on a day like today, I got a red, I got some pinks, I got some light greens, and some greens. This is a hedge portfolio. On a day when the market's either up a lot or down a lot, if you're all red or all green, you're trading wrong. This is how your portfolio should look on any average day, okay? What you're looking at right here is the primary live trade brief model portfolio. As I said, it's based on a $100,000 model portfolio, but check this out. I'm only using about 65 grand of it, of haircut. The rest is in notional cash, all right? So about 65 grand. Let's take a look at how we're doing month to date. Month to date, we've returned about $20,000 in this portfolio on about 65 grand in risk. That's a hell of a return. That's nearly, what, 30%-ish, okay? That's pretty damn good. There's a couple losers, Brazil and the GLD. GLD, I have long-term trades on GLD. That's why I'm showing it as a loss. Look at this trade on GLD right here that I put on last week. This trade's been on for about a week and a half. It's up 3,500 bucks, and it's about to make 5 grand. This is a bearish double vertical. I put this trade on last Tuesday in my primary live trade brief at 9 a.m. And I'm risking 5. Look at that, guys. Man, this guy really flies in accordance with his SOP most of the time. Maximum loss, 5 grand. Max potential gain, 5 grand. That's a nice thrust to weight ratio, isn't it? 1 to 1. 69% probability of collecting a full 5 grand by next Friday. 3 out of 4 percent, or 3 out of 4 odds of at least making some scratch. This trade's going to finish at 5 grand, I think, max profit. Bearish double vertical. So the reason I wanted to show you that was because gold's showing up as a losing trade year to date. The main reason is because I've trades out to January of 2017, longer call diagonals, which I really don't care about right now being down. So them being red in my portfolio, it ain't going to stay that way. But this trade is looking good. If you're not, what the hell is a bearish double vertical, Whiz? You lost me. A double vertical is simply 2 trades on top of each other with the same strategic mindset. Let me say that again, and then I'll explain it to you. 2 trades on top of each other with the same strategic mindset. I, last Tuesday morning at 9 a.m. with my trader, said, I am bearish on gold. If you want to know why I was, you can sign up. That was my strategic mindset. The tactic that I employed, since I was very, very bearish on gold, was a bearish double vertical. Here's how this trade works. I sold a bear call spread. I sold the 122 calls and bought the 122.5 calls. This is called a bear call spread, and it's also called a credit spread. I took in some scratch to do this trade. Took in some coin. Now, since I was really, really bearish, this is a bear call spread, which means I didn't think gold was going up above 122. Not only did I think it was not going up, I knew it was going to go down. So I took some of this credit in the credit spread, and I bought a bear put spread, which many of you know as a debit spread. Credit spread, debit. I paid, look at this. Look at how much it cost me. My grade point average is Mr. Blutarski in Animal House, 0.0. This trade cost me nothing. I like doing double verticals where I can where I get paid essentially, but this one was scratch. I did this trade. It wasn't a credit. It wasn't a debit. That credit spread paid for my debit spread. Love double verticals. But remember, guys, a double vertical, whether it's bullish or bearish, you have got to be, you really, really, really have to believe your strategic mindset. If you're kind of like, nah, I think gold may go down a little bit, you might just do a bear call spread or the bear put spread. If, like me, you had a very sound strategic mindset about why gold was going to go down, maybe you do a double vertical. It's kind of an afterburner trade. That's what I call it. Because when your afterburners are working, man, you're moving fast and you're making money. When one of your afterburners blows out, you can get killed. If this moves against you, it moves against you pretty fast, okay? So have I had double verticals move against me? Hell yeah. But more often than not, we set our eject points about when we're going to get out of a trade. So there's our month-to-date performance. Look at how we did last week. And again, men lie, numbers don't. January 2nd to the 6th. Those 3 weekly options trades and then the rest of the primary live trade brief model portfolio absolutely crushed it. $23,000 in a week. There's SPX, there's Twitter, and there's the Apple weekly. There's our Apple positions, SPX, Twitter, Apple. Everything else is in the primary live trade brief model portfolio. Let me scroll down because I got to be a compliance officer. There's red in that portfolio. It ain't all victories. Let me show you some of the other positions, and then we're going to add a trade to the portfolio. Apple, AIG, Japan, Brazil, China, gold, Morgan Stanley, Russia, the S&P 500, USO, XLE, which is the energy ETF, the financial ETF, the technology ETF, and the consumer cyclicals ETF. Holy hedge portfolio Batman. Okay? As I said, this covers a wide swath of the economy. And there are hedges in here as well. The XLP, for example, if you're not familiar with the XLP, is the consumer cyclicals, consumer staples. Okay? Let me show you a chart of the XLP. What is your strategic mindset about trading the XLP, Whiz? First of all, the XLP is a good hedge against the market pullback. What the hell are you talking about? Folks, portfolio managers like me, hedge fund managers, institutional investors, you know where the smart money goes when the market goes to hell in a handbasket? They don't run out in their yard, put their money in a Folgers can and bury it, okay? Yes, I'm old enough to know what a Folgers can is. They don't do that. Capital goes somewhere. So the historical flow point for money in a down, if the world's going to hell in a handbasket, Tesla, people ain't buying Tesla cars, okay? And people could care less about clicking on an ad on Twitter and increasing their revenues, okay? But they do care about buying toothpaste, smoking, or getting a drink, and hopefully using toilet paper, okay? So in the XLP, you have your Costco's, your Colgate-Palmolives, your Walgreens, your Sin stocks, right? Your Modelo's, your beers. So the XLP is a pretty good long-term strategic bet that if the market pulls back, money is going to flow into this. So this is a decent trade to have on there. XLF, okay, that's the financial sector ETF. XLE is energy. XLK is technology. Okay, all these are recent trades, additions to our primary live trade briefs. And in our live trading session every Tuesday morning at 9 a.m., I cover the existing positions, but more importantly, I cover what the new trades would be if I put them on. For example, if you guys joined, said, "Hey, Whiz, what would be your new trade on Morgan Stanley?" This trade's already up $3,300. I show you what it is, and then I would potentially add it to my model portfolio. There's a trade on FXI on China that's up nearly $2,000, and this one goes out to January of 2017. Okay, that's the cool thing about options is we can trade options and have a position so far out in time. Who buys and holds anymore? Nobody. The average holding time of a stock, I was going to say investor, trader, is 4 to 6 months nowadays. This isn't our father and mother stock market. You don't buy shares in GM and put it in your shoebox in the closet. Okay? So don't, people are like, wow, you can only trade options out 2 years? Who the hell owns stock longer than that? Now, if you're a dividend player, I get it. My mom, for example, but the majority of people nowadays, folks, are not buy and hold investors. I'll leave it at that. So I'll tell you what. Let's take a look at a couple potential weekly options trades and a longer term trade, okay? So based on my strategic mindset, let me open the chat or something like that. Let me ask you guys, in this portfolio that you guys see right now, which trade would you like to see if I wanted to put on a new position today? In which one of these? Because like I said, this is a pretty hedged and diversified portfolio. Let me know what do you guys want to see on, okay? Anybody like China? I love gold, the GLD, long term, okay? It's a good hedge against inflation, and it's a good, it is a very, very good hedge against buffoonery in the world, whether it's a Grexit, right, a Greek exit, or an Israel-Iran conflict. I love the GLD, like the technology sector, the XLK, love China. Why don't I ask you guys, let's take a look at the longer-term trade first. So you guys let me know, what would you like to see a longer-term trade on? Why don't you guys let me know? And that'll give me an opportunity to take a drink of water. Okay, China. Got it. Love it. You were the first one to answer, so you win. I think people were still typing, but no worries. All right, let's take a look at a trade on China. Now, the FXI, guys, is the iShares China Large Cap ETF. It's a very, very good proxy. I mean, look, 11 million shares today. It's a very, very good proxy for what's going on over in China. Let's take a look at this. This is a good-looking chart right now. Okay, obviously bottom left, top right. That's nice. There's a lot of ups and downs and volatility in there, but net, the majority of the move is to the upside here. Strategic mindset, China, even with all its problems, you know, we would give our kingdom for a GDP of 7.2, 7.4%, wouldn't we? We're walling around here with a 5, and I don't even believe that between friends. I think that's an absolute lie, but I digress. And their 7% might be a lie. But suffice it to say, China is an up-and-coming giant. I haven't even talked militarily. I mean, you got a country who drags an oil platform into Vietnamese waters, plops it down, and says, what are you going to do about it? They woke up during Thanksgiving and during our Thanksgiving and put an ADIZ, an Air Defense Identification Zone, over islands that Japan and South Korea say they own. And they said, what are you going to do about it? So I didn't even talk military about China. They really want to be Asia's. They're done with the United States, okay? U.S., you're not an Asia power anymore, Pacific power. Beat it. And we've kind of tucked our tail between our legs and ran home, which is kind of our strategic overview of the world nowadays. But very, very long-term bullish on China. Again, full interest in disclosure, it has some problems. But that is a great strategic mindset for a trade like this, with what the tactic I'm going to use is called a long call diagonal. In a long call diagonal, we can be bipolar, and so can I, right? We can be long-term bullish on something and short-term neutral, short-term bearish, short-term. We can be short-term something and long-term something. So here we go. Let's open our options chain here. And I'm going to be Albert Einstein here. I'm going to click January of 2017. I'm going to hop in my time machine and go as far out in time as I can looking at these options. Okay? Let me collapse. The calls are on the left, puts are on the right. I'm just going to collapse the puts for the time being because I need to see some Greeks over here. Delta. Okay? And let me highlight the front month, March. I'm not going to trade, I'm not going to trade Feb. Okay, let me deselect that. Now, time machine all the way down to January of 2017. Why did I do this? Why did I want to see Delta? Here's what I want to do. And I already have this position on, which is funny. But I want to buy. You see this light gray background? And then down here you see the dark gray. Light gray is in the money, and the dark is out of the money. So what I want to do is I want to buy an option, a deep in the money option, closest to a delta of 0.8. What the hell is delta, Whiz? Well, guess what? Delta, a delta of 1.0, first of all, is expensive as hell. 22 bucks, Whiz. You know why? It is way, way in the money. And when you have a delta of 1.0, that means if the if the FXI goes up a buck, your options prices go up a buck. Delta with a 1.0 is a 1-for-1 change. Now, for all you rocket surgeons out there, you can pretty much figure out that a 0.5 delta is out of in this case it's at the money, but it's out of the money, and has half as much a move. And oh, by the way, it's a hell of a lot cheaper than 22 bucks. So what I like to do, ladies and gentlemen, is I thread the needle between a 1 delta and 0.5 delta, and I go around a 0.8. Okay? A 0.8 delta call is in the money, and it's got some meat on the bones. Okay, so let's click on this. I'm going to click Create Spread, and this is our TradeMonster platform, but TGO traders trade with everybody. I just use TradeMonster. Now, those are the 32s, weren't they? I'm going to buy, again, I'm going to go hop in my time machine all the way out to January 2017, buy those 32 calls, 80 delta calls. Let me get rid of this for a second because I want to show you something. Okay, let me just confirm, 80 deltas, 32s, yes. Now, buying 10 of the, and just 10's a placeholder for now. I'll take a look at my risk here in about a minute. Buying 10 of the Jan 1732 calls. Whiz, that's 11 bucks, man. That's a lot of money. You're right. Buying these deep in the money 80 delta calls right now is like me buying a $250,000 Porsche at the Porsche dealer down here in Miami, right? It's a lot of money. Down here in Miami, I want a sugar mama or daddy, depends. So I want somebody else to make some monthly payments on this thing, and I'm going to do it right now. I'm going to sell a front month, February, March, April. Those are front months. Upside, we're trading at 42 on the FXI. Let's maybe 43.5. Upside, call. I just saved us 60 cents. We are already making money, so to speak. I already lowered my cost basis. You could just buy these deep in the money 80 delta calls, and guess what? You're on the buy, hope, and pray method. Many of you have, if you're new to options trading, just do that. I know how to buy calls, Whiz. Yay. Have somebody else pay for them, man. Start being cheap. Start initially making money. I'm going to sell 10 of the front month 43.5 calls. I'm going to click on Create Order, and we're going to do something cool here. First of all, I hate paying at the ask. That's another market maker's garage in the Hamptons. I ain't paying for his extra garage. I'm going to come off the ask a little bit. We're going to have to come close to Mr. Market Maker on a trade like this. I like inching up until he can't stand it anymore. He goes, fine, I'll give it to you. I do not go in at the ask. Now, look at this. I told you always look at Mr. Frowny Face first. Do not ever look at Mr. Happy Face first. Always look at your max potential risk. Retail traders and suckers look at your max profit. This is how much I can make. What's your risk? I don't know, but I can make this. Wrong. What is your max risk is the first question you should ask. Okay? In this case, Whiz, you are breaking your SOP. Man, you had me. Now you're an undisciplined aviator. I'm not, because we're going to fix it. My max potential loss in this case is $10,600, double my SOP. Now, again, it's my grade point average from college. 0.0 probability of that happening. However, it doesn't matter if there's a nil probability. John and Pete Najarian, buddies of mine from Chicago who built TradeMonster, and you guys see them on CNBC, they're smart. Right? They're going to haircut you. They're going to margin you as if what? The FXI is going to 0. Now, if the Shanghai goes to 0, we got bigger things to worry about than this trade. If the Shanghai goes to 0, I'm up in Montana with my AR-15, my gold, my butter, and water. Okay? But it doesn't matter. Even though John and Pete know that the FXI ain't going to 0, their risk management is going to say, hey, Whiz, this thing's going to 0. We're going to haircut you appropriately. So instead of risking $10,600, let's go back to our tactic, and I could do what? let's add a disaster insurance. Let's add an ejection seat. Let's buy a put that is stupid out of the money. I don't know, the FXI is at 42. I'm throwing a dart, 35. Yeah, my cost basis went up, but look at this. Ski ramp. No longer is the FXI going to zero. No longer are we going to be haircutted as if this thing goes to zero. Because now we're along the FXI at 35 if, God forbid, this thing starts imploding. Again, let's come off the ask a little bit. I don't know, 1380. Now click Analyze, and let me see what we did. Look at that. Is that some coolness or what? I took our risk down $10,000 on this trade. Now, if everything went to hell in a handbasket, $2,700 versus $10,600. Everybody follow me. Now we can look at Mr. Happy Face. This max potential profit, guys, is just based on the short call. Okay, that March front month upside 43.5 call. Here's what we do. If by March expiration the FXI is trading below 43.5, great. We collect our max profit. If it's trading above 43.5, don't freak the hell out. There's people who are like, "Where's my short calls went in the money?" Good. Be happy. You were right. The underlying went up. Yeah, but my short calls in the money. Who cares? It's math, folks. Press the I believe button right now. You made more money, listen to me, with this 80 delta call going deeper in the money and becoming a 0.84, 0.88. Eventually, if you're right and the underlying keeps going up, this long call is going to be a 1 delta call. So look at the deltas. I can't with the order ticket open. Look at the delta of the front month call. It ain't 0.8, folks. It's math. So people who start freaking out like, "Whiz, the FXI's at 44. Celebrate. Buy these calls to close, or what we can do is roll them up a couple strikes and out to maybe April. That's all you do. Think of a wheel rolling down a mountain, folks. It's called the options wheel, man. If every month going forward, we're going to sell front month upside calls. If it's below 43.5, great, max profit. Let's sell the Aprils, the Mays, the Junes. If it's above 43.5 by March, who cares? Roll them up and out to April. Roll them up and out to the April 45s. It depends on what the underlying is doing. The only exception to this rule is if the underlying goes on a tear. Let's say the underlying, the FXI, I don't know, China wakes up tomorrow and says, I don't know, we turn water into money, whatever. The Shanghai just has a rip your face off rally and starts rallying like crazy. Get out of the way. Put your boots up on the desk, put your hands behind your heads and smile. Don't sell front month short upside calls if the thing's having a rip your face off rally. Enjoy it. If the thing's rallying hard, these 0.8 deltas are going to be deeper in the money pretty quick. Now, if it starts to level off and move sideways a little bit, get back to selling front month upside calls and putting a little monthly car payment away. This is called a long call diagonal with a protective put. There's our ski ramp right there, man. That protective put reduced my haircut, my margin by 10 grand. Now I can take that 10 grand and go deploy it somewhere else and have some fun. Does that make sense to everybody? I'm getting a lot of hell yes, and that's pretty cool. Oh, if you've been trading options for a while and you haven't seen that tactic, man, I'm happy I'm putting a smile on your face, but we got to talk. We can also do what's called synthetic stock. I will teach you all of these things, but these are great trades, these long call diagonals. Like I said, Morgan Stanley, we have a lot of diversified long call diagonals. Now, let's talk about 4 minutes left. I wanted to do a couple potential weekly options trades. Probably won't have time to do a lot of them. Guys, you got to look at Apple, man. Holy rip your face off rally, Batman. Let me show you what's going on with Apple. I've been trading Apple since it was an acorn. Here's what Apple do. It consolidates and moves sideways and then has a rip your face off rally. Last earnings, look at that. That is a, technically, legally, it's not a gap move, you know, I get it, but that's a rip your face off rally. Stocks tend to fill at least half of that rip your face off rally. Look at that. That's classic, perfect, filled half the rip your face off rally. Whoops. Okay. Stop. And there's a triple bottom. 1, 2, 3, springboard. Okay. Now, this earnings, rip your face off rally. And I think it's going to do the same thing. We're going to have a half gap fill to about 116. We're going to move sideways and consolidate and then go up. Look at that. I couldn't draw that. Actually, I could. I couldn't draw that any better. But let me show you the 3-month chart and show you what I showed my TGO traders. Like I just showed you, we've been crushing it on Apple trades. Look at this right here. Now, for those of you who are technical analysis Trekkies, that is a pennant, right? It's this thing down, up, tighter, down, up, smaller, down, up, even tighter, down, boom. That is a classic. I told my traders this thing is going to break out. It is out of its trading range, and obviously with that monster earnings, that's what we saw. Okay? So now, what do I expect to happen? I think Apple's way over its ski tips here. I love the company. I don't own anything Apple. My kids do. We are way over our ski tips here, especially in the past couple days. This is a monster move for Apple. I think it's going to start giving a little bit back, to be honest with you. Okay? And you know, you don't want to step in front of a moving train, but after knowing that picking a top on a stock is very, very hard. So the safer trade is to not step in front of that. But I sent out a trade earlier today, I think I sold the 124, 125 bear call spread. Let's take a look at the 125, 126, just because I know I've been in this with Apple before. And I don't want to rush through this because this is important. Let me just flop these around. This is called a bear call spread, right? Maybe 75 contracts. Let me see what the risk is. 75. Let me just do this real quick at 38 cents to see what the risk would be. I think it's going to be right around my SOP. Yeah, 4,600 bucks. All right, let me go back. Now, I mean, we're pretty darn close. It's Wednesday afternoon. Obviously, the market just closed a little while ago, so this trade can't get executed. Apple might be up after pre-hours. Yep, it is. So it's pretty, you know, I guess the more conservative would be the 126, 127. Okay. Can Apple keep going? Hell yeah. I've seen it before with a lot of these. Where's this thing going to top out? This first solar news, all the stuff that's come out this week, it's out. Okay, well, that was rocket surgery, Whiz. It is, meaning they're not going to come out and re-announce this Tesla thing. They're not going to come out and re-announce the bond offering. They're not going to, you know, tomorrow morning go, oh, by the way, didn't you hear about our Tesla thing? It's already, the news is out there. That's why after these type of moves, Apple tends to go look around and go, all right, now what? Now what are we going to do? That's when it usually consolidates. So maybe the 126, 127 at 22 cents is a little more conservative. So, yeah, I mean, that's, you know, the break even is 126.22. I mean, this is by Friday, folks. Can it have another monster move? Sure. Will it? Like I said, I've been trading this thing for 12, 15 years, man, and I know its patterns. I don't feel it. I feel these things in my knees. Oh, red, you know, storms are coming. That's me. And I got, you know, nearly 20 grand year to date in actual profits to prove it. We're risking a little more than my SOP, my standard operating procedure of about 5 grand. I'm okay with the pilot in command because the max potential profit of 1,700 bucks is a 65% probability. Okay. The little more gutsier, I was going to choose a more colorful word, but I won't. Trade would be this at 38 cents. Okay. This one is a little more, you know, a lucky strike moment, right? Smoking one of those filterless lucky strikes and is a more aggressive trade. Risking about $900 less than the other one, but potentially making a hell of a lot more, $1,200 more. But now obviously our probability of breaking even goes down to 125.38. Okay, so that's this is a more aggressive trade. Okay, so all right, guys, I'll tell you what though. Here's how this works at Top Gun Options. Let me just pull up my Skype real quick because I need to pull up the link that. So 1 second here, because to my broadcaster right here. There we go. So during my live trading sessions, Monday morning for weekly options, Tuesday morning for our primary live trade brief, and then Thursday morning for Doug, which I'll talk about in a couple seconds, I stop trading. I copy and paste the text from the trade into this box. I paste it right there, and I push send broadcast. In about 2 seconds, I look at my cell phone, and there's my text alert. After the webinar is over with, my live trading session, I go over to this tab. I select weekly options or primary, and I put in the link to the replay, and I capture the screen. Every trade I take a screenshot of in the live trading session and email it out. So you don't have to attend our live trading sessions to get all I've been sitting in death by meeting, and I get a text alert from Doug. I got my Trade Monster application on my phone, and I'm like, you know, that's a pretty good looking trade. Boom. So you don't have to attend. A lot of traders here at Top Gun Options watch the replays even though they attended the live session. They watch them over and over because they learn more each time they watch it, okay? So what I want to do is introduce you guys to a test flight. If you liked anything that you saw today, here's where you need to go. It's kind of easy to remember here. TopGunOptions.com/14-days. Okay, TopGunOptions.com/14-days. Okay. I think Dan can. We'll probably throw that in the chat box for me there. He's a good wingman, providing me mutual support. So here's what you're going to get. Obviously, I just showed you weekly options, but here's what you're also going to get is access to the primary live trade brief as well. Okay, so the weekly options, 9:45 to 10:15 every Monday morning. Again, you don't have to be there. You're going to get a text alert with each trade. I showed you 3 trades that we did last week. Let me just show you those in case you didn't see it and you joined us late. Here's the trades from last week. Now, I got 2, full disclosure, folks, I have 2 Apple bear call spreads on right now that aren't doing the best because of the Apple pop. It's also Wednesday. There's a lot of time. Oh, Whiz, it's Wednesday. They expire Friday. Yeah. When you trade weekly options, folks, you have to treat them like monthlies. What the hell does that mean? Here's what it means. A weekly option that I put on Monday, I treat like week 1 of a monthly. Tuesday, week 2, Wednesday, week 3, you get where I'm going. So even Friday, I treat like expiration week. I've seen weekly options trades be horrible all week, and Friday around lunchtime, it turns around. So you have to be disciplined, and you really have to stick to your strategic mindset. So, Wiz, there's only 2 days left. In 2 days, folks, we could wake up tomorrow and, here's Greece again. We're not going to do anything. You guys can all suck it, and the market implodes. Okay, so I've had weekly options trades that are going down the fairway Monday through Friday morning, and everything goes to hell in a handbasket Friday afternoon. Okay, so know that there's a lot of time left. Okay, so that's weekly options. I'm going to give you access to our primary live trade brief as well. That's every Tuesday morning at 9 Eastern. Okay, that's 9 Eastern, and I just showed you. You guys just got a great free look at all the positions in my model portfolio, which not a lot of people get to see. But I'll show you again, because I like being open and honest, and I can tell a lot of you. And here's the deal. I mean, you ready for this? I'm also going to throw in access to our primary workbook. This thing's $45. I don't know. You think I'd know since I run the place. And the OPCL, which I think is about the same. And some video modules, some training to kind of get you a refresher if you need some refresher for options trading. You ready for this? $38. I left flight school in Kingsville, Texas, thinking that you drink wine, white Zinfandel out of a box. I got to California, and I flew in California for about 7 years and left a wine snob. $38 is about a bad bottle of wine, maybe an average bottle of wine. For the price of an average bottle of wine, I'm going to give you access for 2 weeks, 2 weeks into my 2 portfolios, okay? That's about 620 bucks, folks. If you add this up, the videos, the workbook, the OPCL, I didn't explain what the hell an OPCL was. Sorry about that. Me and my acronyms. OPCL is the Options Pocket Checklist. My apologies. We have 3 workbooks at Top Gun Options, primary, intermediate, advanced, and they're all about 200 pages each. The F-18 flight manual was about the size of a phone book. You don't go flying with a phone book unless you're short and need to sit on it, right? So what we do is we squeeze it down into what we call a PCL, a pocket checklist. It's got what you need out of that flight manual. That's what the OPCL is, the Options Pocket Checklist. It squeezes all 3 of these manuals down into the 35 tactics, the critical information you need to know. Folks, these 2 manuals alone are about 100 bucks. You get them, you'll get them for 38 bucks, but more importantly, you get access in the 2 services that I just showed you. One made 7,600 bucks last week on 3 trades. If you can't do the math and say, you know what, potentially making 7,600 bucks for 38 is a good trade, I don't want you to sign up because you're going to become very, very frustrated if you can't recognize a good trade like that. Okay, so topgunoptions.com/14-days. Obviously, at the end of it, I think this rebills quarterly. I think this is a quarterly subscription. So once you get on board, I think it rebills at $400 a quarter, whatever it is. I should say it on there somewhere. And again, I'm not the marketing director, guys. As you know, I'm the trader, and I hate marketing. I hate pitching stuff. It stinks. I'm very passionate about what I do, and it ain't marketing stuff. So there you go. Okay. All right, guys. I'll tell you what. I went a little over on my time, but it looks like I'm tail end Charlie on the flight schedule. So I'm here to answer your questions, your concerns, your oh by the ways, your smart remarks, whatever it'll be. Like I said, 38 bucks for 2 weeks into our Top Gun Options program. It's funny because, and again, I hope since this is not our webinar, I hope my marketing people aren't on here because I always catch a coffee cup to the head when I say this. I don't want you Top Gun Options forever. That's not my metric of success. Just like the real Top Gun, you don't stay there, folks. You go and get trained. If you graduate successfully from Top Gun, you throw a patch on your shoulder and you go out to the fleet. You become the brain, okay, that others pick while you're out in the fleet. You don't stay there. I don't want you to stay here at Top Gun Options. I want to train you how to trade strategically, operational, and tactically. And then when you say, you know what, Wiz, I got it, man. I can go out and do this on my own. That's my metric of success. It ain't probably the best business model, but I think it is in the long run. You know why? Because you go out and you tell friends. You know what? Where'd you learn how to make money like that or trade options? Good guy over at Top Gun Options and his team. That's what puts a smile on my face, not you guys hanging out here forever, to be honest with you. Great business model, but I think the better business model is actually training you, putting a smile on your face, and getting you guys airborne. Okay, so okay. Questions, concerns. Oh, by the ways, let me pull something up real quick since a couple of you guys are. Since my Trade Monster platform was eating some of my bandwidth here. Let's take a look at some of these questions. Dan, and again, I'm a WebEx guy, Dan, so I'm not a GoToWebinar, and I'm still trying to fish around and figure out where there it is, chat. I think there's a Q&A place right there. I want to make sure I'm looking in the right place for all this stuff. Yeah, absolutely. AIG. AIG is it's a great financial, and it's funny, regional banks, mom and pop, AIG is it's a behemoth, guys. If you don't know the story of AIG, you should, because you owned it. What are you talking about, Wiz? Yeah, you did. Let's take a look at the 10-year chart of AIG. You owned it right there. AIG was a $1,200 stock that essentially went to zero. Why? Because AIG was in everything, finance-wise. They do insurance. They also do reinsurance. They do reinsurance. Insurance companies have insurance, right? So AIG was in everything. They were a systemically important financial institution, so much so that you and I bailed them out to the tune of $180 billion. You were a shareholder of AIG, in case you didn't know. Now, AIG has done a hell of a job of, not only did they pay back our loan, but the government made $22 billion off of their AIG trading, their bailout. Now, don't run out to your mailbox and look for your check, your dividend check from the government for bailing them out. The government ate it. And we can talk about that some other time. But AIG is a financial behemoth. They come out with earnings tomorrow after the bell. I would definitely look at being long-term bullish on AIG. Over the past 3 years, we've closed each year a long call diagonal at AIG averaging from $10,000 to $13,000 in profit. Our AIG long call diagonals, those 3 years in a row, averaged about $1,000 a month. Now again, these long call diagonals, they're not sexy, folks. I mean, they're, every once a month, let's close our short calls and roll them up and out or down or whatever we need to do. So it's not like, it's not weekly options. It's not, man, I'm risking 12.5. I made $7,600 bucks. What am I doing next week? It's not hair on fire afterburner trading. But that's what a diversified portfolio does. Yeah, we got some hair on fire afterburner trading with Apple and Twitter and the S&P 500 last week, but we also have trades at the January of 2017. That's what you do in a diversified portfolio, okay? You do some short-term trading, you do some longer-term investing, and you really balance it out, okay? So yes, I would definitely take a look at AIG. Whoever noticed that in my portfolio has astute eyes. I'm a Morgan. In one of my other portfolios, I'm long Goldman Sachs, and another it's JP Morgan. In this one, it's Morgan Stanley. Each one of those blue blood financials, I think, here's the way I rank them. Goldman Sachs, gold medal winner. JP Morgan is it's probably the bronze right now. Morgan Stanley's definitely silver. But if JP Morgan and Jamie Dimon kind of unfornicate all their legal issues and kind of make peace with the Attorney General, maybe someday they'll move up to a silver medalist as well. So that's my take on the financials. Russia, the RSX, man, you want to talk about a dart, a Hail Mary. This might, if you want to use the Captain Kirk rule of investing to boldly go, guys, Hank Paulson, Stevie Cohen, Buffett, your Soroses, your icons, they don't go where men have gone or are going right now. That's just not the way they become quadbillionaires. They boldly go where no one is right now and have a strategic mindset, right? This might be that time. This is Russia, okay? This is the RSX, Market Vectors Russia ETF. I think we've stopped our nosedive and we're starting to pull off the trees here with Russia, okay? For a while there, it was ugly. The sanctions, the ruble, and the crude markets imploding. Perfect storm for Putin. But I will tell you, folks, do not count out a cornered Putin, okay? So kind of like my Japan trade is a 1-0 trade. It's either going to work or it's not. My Russia trades are the same way. Okay, so I, definitely an interesting, potential trade there. Okay, so yeah, absolutely. Okay, again, guys, now we're getting close to the end of my time here. TopGunOptions.com/14-days. $38, guys. I mean, seriously, bottle of wine, end of 14 days or even at the end of 2 days, you shoot us an email, support at Top Gun Options, and say no thanks, and you won't get rebuild. $38 essentially covers the cost of me saying, okay, you're not going to get rebuild. We don't do free. Nothing in life is free. If you sign up for anything free, you're going to get what you pay for it. So it's $38, and that kind of covers me giving you access and just kind of, a little bit of a break even there to give you access, okay? So TopGunOptions.com/14-days. And like I said, it's Top Gun Options was born out of the fact that I didn't have this, okay? I've been that young. You might not all be young, but I was young when I learned how to trade options and had to teach myself. There was a lot of these and then what moments, right? I sat there listening to some guy in a knockoff Gucci suit, tell me about this is a call, this is a put, and then I'd sit there and go, okay, great. Now what? Now what do I do with it, man? Where do I fish? What bait do I use? What time of the day do I go? How do I cast? Great questions, kid. No. Demo do. That's how I learned in the military. Let me demonstrate how to do something to you, and then you do it. Demo, do. So I kind of went from your shoes up to Wall Street there, and then decided Wall Street's not exactly the kind of people that I like to hang out with, to be brutally honest with you. Okay, so that's kind of where Top Gun Options was born. All right, guys. So I'll tell you what, Dan, I'll throw it back to you, my friend. If you got any questions, concerns, oh by the ways, or smart remarks as well, I'd love to hear them. I'm here for you guys. And if you have any other stuff that you want to cover, I am all ears, man. But thanks for throwing this together. Thanks for the invite, man. I appreciate it. And hopefully we'll see some folks joining Top Gun Options here pretty soon. I listened to a lot of the other presenters, a lot of 500-pound heads on here today, man. And I actually took a lot of notes with some of the earlier speakers. So nice job putting all this stuff together. So over to you, Dan, if you have any questions or concerns for me, man.
Whiz, thank you very much. This is an excellent presentation. I do want to make a couple of comments. We got a comment from Fish in the chat room saying that telling everybody you've got to give it a try. You got nothing to lose and everything to gain. I've been with Whiz for 2 years and will never leave. I have found a home and a mentor, and I don't know that you can get any stronger testimonial than that. So I do want to point out to everybody that
Fish is a good dude. He's one of those TGO veterans that have been around for a while. You know, like I said, Dan, you know, I don't like folks hanging out forever because that's not my metric of success. But guys like Fish and a lot of other veterans stay for the camaraderie. They stay for the trade ideas, and they stay just because we're a tight-knit team. So Fish has been around for a while, and I appreciate that, Fish. So thank you.
And I'm sure he sticks around because you're always learning. And, you know, you're always evolving as a trader, and obviously he finds a lot of value to stick around. So that says a lot. And as you pointed out earlier, $38, you know, whether or not you drink wine, I mean, if you're not a drinker, it's dinner and a movie. That's, you know, I'm going to go out on a limb here and say that no matter how long you've been trading options, there's absolutely no way you're not going to get $38 worth of value out of that training package. It's impossible. And in fact, if you've got an established options trading account, you're probably going to get 100 times that value or more. So anyone who's in this room, definitely check out topgunoptions.com/14-days. That link is in the chat box. I'll throw it in there again, just in case a couple of comments made it roll up the screen. But definitely recommend you check that out. And Whiz, there's just a couple of quick questions that came in. One was asking if you traded weekly options.
You bet. So one of my portfolios, I manage 3 portfolios at Top Gun. I manage the weekly options model portfolio every Monday morning at 9:45 a.m. And I also manage the primary live trade brief portfolio, which is Tuesday morning. I manage a third one, which is called Accelerated Retirement. It's a lot more slow and steady wins the race and longer-term trades. Definitely not weekly options. A little less of the front month. A lot longer term. You don't get access to that portfolio with this offer. You just get the weekly options and primary. But absolutely love weekly options. And as you saw, you know, we had 3 weekly options trades last week with a risk of $12,500, and we captured $7,600 of that. So that's pretty cool. So absolutely love weekly options.
Nice. 2 more questions. Richard is asking, is there a way to contact someone live on the phone if he has specific questions?
We do. What we prefer, if you have trading questions or anything about the portfolios, we have something on the Top Gun Options site called the Ready Room. Now, the Ready Room of a fighter squadron is where in between flights you kind of hang out, and it's kind of the squadron living room, so to speak, and that's where we prefer people to interact. Because if you're calling to ask us a question, it's much better for everybody to know that question. So we will we'll probably tell you to go talk about it in the Ready Room so we can have everybody. But yeah, and we have, you know, we obviously, Dan, have one-on-one coaching as well here at Top Gun Options. If you want to, you know, set up a no-kidding training plan where I sit down with you and say, hey, here's our mission objective for the next 6 months or a year. At the end of the 6 months or a year, you will be this. It ain't 38 bucks. It's not about bottle of wine type of price there. It's a lot more expensive, but we do have one-on-one coaching available. But yeah, there is you can get in our ready room. A lot of our like Fish, a lot of our fellow TGO traders also get in there and give their insights as well, in addition to our professional traders. So absolutely.
All right, and then last question. Cal is asking, do you provide buy and sell alerts through email?
Absolutely. So, like I showed you guys, let's look at the weekly options model portfolio member page. I will go to SMS/email trade alert archives. So, this morning, I sent out a new bear call spread on Apple. So, as you can see, February 11th, 9:55, it was an email, weekly options traders, placing new bear call spread on Apple. I'm holding the current bear call spread, think the stock is overbought here, due for relief pullback. There's a screenshot, literally a screenshot from my trading platform of the trades and the trade metrics, risking 5 to make 2,500. And then here is about, 5 minutes before that, because I don't know, 3 minutes, whatever it was, minutes before that. It takes me a little while to type an email and then copy and paste a screenshot into an email. But here you go. Here was the text alert. So you actually get both. To answer your question, yeah, we do email alerts. More importantly, we do text alerts. So we do text and email alerts, both of them. We have country and Western. So yes, we have text and email alerts, absolutely.
All right. So thank you again, Whiz, for being here. We really appreciate it. For everyone who's on the webinar, go check out topgunoptions.com/14-days. Definitely worth your while. So, Whiz, really appreciate everything you did. Fantastic presentation. I really thought the first part of it, especially kind of getting a world perspective, a political perspective, really shows how much that impacts your trading strategies and what you do.
You bet, and it's interesting, Dan. It's funny because sometimes not everybody enjoys that, or hey, when do we get to the fireworks factory type of people? You know what, folks? You got to do your intelligence gathering, man. I don't know how many. I remember people coming in Top Gun Options going, Whiz, what the hell is Cyprus? First of all, I don't even know where it is, and why is the market down 300 points on pretend? So if you don't know about these things, if you don't do your intelligence gathering, trading is combat, and at the end of the day, trading's it's a self-cleaning oven. And if you don't do your intelligence gathering and you don't know what's going on geopolitically, economically, militarily around the world, it's gonna wake up and hit you one day, okay? Because if you're a very tactical trader and you don't keep your head above the foxhole, looking around and seeing a strategic view, you're gonna get clipped. You could be a tactical trader for a little bit, and then one of these type of events is going to unfortunately take you out. We're gonna make sure you have an ejection seat, and that doesn't happen to you. So thanks again, Dan, for having me, my brother, and thanks everybody for listening to me this afternoon. Have a great night, man. Back over to you.
All right, thanks, Whiz. Have a great day.